What's going on, guys? So today, the main focus is going to be on Canada's CPI data. CPI is extremely important for all central banks because this has been the main focus. Central banks has been trying to lower inflation. And the odds of the Bank of Canada, they have been seeing inflation decelerate. This is why the Bank of Canada is in their cutting cycle. This is why they have been cutting interest rates. So for this print, what's going to make us look for more of a weaker CAD currency? If we see a massive miss in today's CPI print, this is what's going to increase those odds for the CAD currency pair to continue to sell off, right? Because markets are now expecting for the Bank of Canada to continue to cut rates by 25 basis points, which is already expected. If things continue to go the way that it's currently going, most likely we're going to see a 25. But if this inflation print is lower than expected, it's going to increase those odds for the Bank of Canada to cut by 50. And that's where we could find out really good tradable opportunities. So that's what I'm going to be looking for my live call that I'm going to be hosting for this event. If I see that inflation is a massive miss, CAD sells, I'm going to be looking to take advantage of that. But now let's look for the opposite. If we see that inflation rise, if inflation comes out as expected, most likely we're not going to see anything change. We're probably, it's no tradable opportunity, so just leave the markets alone. But if we see that inflation comes out higher than expected, it has to be significantly higher than expectations. Then we could expect them to be more restrictive. Central banks is not in a hiking cycle, so we don't have to worry about interest rates hiking. We don't have to worry about that, but we have to focus on if they're going to pause rates, because if the next meeting signals a pause, that's where we can start looking for CAD strength, and that's where the opportunities will come, but only if we get a higher than expected print, right? Because behind me is my economic calendar. I know in some sources you're only going to get the actual, the previous, and the forecast, but understanding the expectation lows and the highs from banks' expectations, right? This is the bank's forecast numbers, their distribution numbers, where they're expecting data to go. This is what helps you get to take advantage of those very volatile moves, okay? But just to summarize, if we see inflation comes out as a big miss, expect CAD weakness, okay? That's where the good plays are going to come if we get a massive miss. If we see that data comes out higher than expected, higher inflation, expect those CAD buys to start coming in. But I really don't like those buys. I want to take advantage of a miss, but if we get a beat in data, if data does come out higher, I want to see a massive print just to see if that strength actually holds.